Let's go live now to Chris Richardson from Deloitte Access Economics. Mr. Richardson, good to see you. The RBA is likely to cut rates further tomorrow. What would be the main reason?
They do still see weakness in the economy. Everybody realises that. That's a key part of what Australia is talking about. What we're not talking about as much is the other reason why the Reserve Bank is cutting rates. That here and all over the world, it's getting harder than it used to be to get inflation moving. Now, that first thing, that weakness in the economy, is something that people should worry about. The second thing, that sort of change in the way economies work, is a little less scary. And one of the challenges the Reserve Bank faces is everybody is thinking weakness, and you're seeing that in consumer confidence.
Would the RBA be concerned about the effect that we've seen about from the last two interest rate cuts? That is a bit of a growth in the property market because interest rates are so low, but not much movement in the unemployment rate.
Yes, and that combination does have it worried. And the other thing that's going on is since those two rate cuts we had in June and July, consumer confidence has fallen to a two-year low. And again, I think that's part of the Reserve Bank's messaging, or relative lack of it. It hasn't explained the sort of two things. One you need to worry about. One is a problem for the Reserve Bank, but not necessarily for Mr. and Mrs. Suburbs. Having said that, better housing prices are indirectly better for the economy. And even unemployment, it is genuinely a problem, but it is the result of two bits of magnificent good news. Magnificent good news number one is that job growth remains really good. Magnificent news number two, for 20 years we've been talking about Australia as an ageing society. We want more older workers to be willing to work. We want more mums to be happy to come back into the workforce. We're getting lots of that. It's just we're getting a little bit more of the second than the first, and unemployment is edging up a little.
The mixed messages that you talk about, isn't that more of a problem for the federal government perhaps? And we've seen Philip Lowe for some time now calling on the government to do more, saying the monetary levers, well, there's just not that many more available to it. Looking at the the tax cuts that we saw back a couple of months ago, does another cut tomorrow mean that they've now run their course? We've seen the effect of that, and the government perhaps needs to look at other measures.
We'll get a reading later this coming week. We'll get the August retail numbers. Now, the government has been talking up the potential for things like the tax cuts and the interest rate cuts that we've already had to start to show up in the economic measures. Less clear, however, that data out later this week will give us terribly good news. The retailers themselves remain pretty grumpy. They're not necessarily sending up white smoke signals. It's still black smoke signals. Might need to wait a little further before you start to see it. But I think it's fair to say there's a lot of stimulus in the Australian economy: tax cuts, interest rate cuts, a lower Australian dollar and the like. It's not enough, though, to do what the Reserve Bank would like to see, to cut unemployment by quite a chunk and to get wages moving along faster. That does leave the ball in the federal government's court, but there are good reasons why it may wish to be a little careful.
We're seeing a multi-speed, a two-speed economy here, perhaps a term that we haven't seen for some time. I mean, we're reading the paper today that iron ore, gold prices that are an all-time high. That's obviously helped the budget. We're that close from a surplus just this year when we saw those figures last week. What is the overall story?
So the budget is doing much better than the economy is. It's not because the economy overall is going great. We've just been talking about that. It's not because Canberra's made difficult decisions that, to cut spending, to raise taxes. It's because the bits of the economy that drive the budget, you mentioned iron ore prices, those sorts of things. They are the things that's going well. That does give the government wriggle room, but its real question is an insurance question. If it does, if it follows the Reserve Bank and throws a chunk of extra stimulus using its budget at the Australian economy, that would be great. It would get, unemployment lower, wages moving faster, but would also mean that if a genuine crisis hit Australia, we would have less wriggle room available to fight that. And that is a genuinely tricky trade-off and tricky decision to make.
Well, Trump at the White House just last week said that he's not concerned about getting any kind of deal with China. He was talking beyond the 2020 election. Now, what Donald Trump does and what he says can often be two different things. But if there's no deal and the trade war persists for the next year, a year and a half, do we see bigger problems for Australia ahead?
The longer the trade wars go on, the more damaging they get, not even necessarily because of the trade bit. It's the uncertainty bit. Nobody knows what happens next. And a lot of what's, the strength or otherwise in the world economy at any given moment is the willingness of businesses who have to spend money today to make sure they can do sales tomorrow, that willingness to do that capital expenditure, construction, buying computers, buying trucks, all that sort of stuff. And all over the world, businesses are being more careful. It's the, so in a sense, trade's just the symptom. The cause is increasingly that uncertainty. It's not just Trump and trade. It's Brexit, Hong Kong, Iran and the Saudis. It's India and Pakistan and Kashmir. There are plenty of flashpoints to worry about.
Just quickly, Mr. Richardson, China as a developing economy, that is the official classification under WTO and other rules. Is that fit for purpose in 2019 in your view?
Look, it is still a developing economy, but here's the thing, ignore that side of it. China would be better off if it let in more foreign businesses, if it was more careful around intellectual property. It's no longer as weak and as poor as it was. It makes sense for China to change, but it's not going to change if it's getting, tweeted at. That's negotiation by tweet is not a winning strategy.
No, it doesn't appear so. Chris Richardson, appreciate your time this morning. Good to see you.
Thanks a lot.